The United States, the world's biggest economy, a global superpower. But behind the scenes, a different story is unfolding. The national debt has skyrocketed past $38 trillion, and an even more alarming crisis is brewing. The domino-like collapse of its banks. All this has the world asking one terrifying question. Are we on the verge of another 2008? Is this the beginning of the end for the US banking system? To understand what's happening, we need to look at the banks that have already fallen. The first domino was Silvergate Bank. Deeply connected to the crypto market, it became the first victim when the crypto bubble burst. As panicked customers pulled out billions, the bank simply couldn't handle the pressure and collapsed. But that was just a warm-up. Next came Silicon Valley Bank, the second largest bank failure in American history. SVB was the go-to bank for thousands of tech startups. When the Federal Reserve aggressively hiked interest rates, the value of the bonds held by the bank plummeted, creating massive, unrealized losses. As the tech sector started to feel the squeeze, whispers of trouble turned into a full-blown panic. In just 48 hours, a staggering $42 billion was withdrawn. The bank ran out of cash. It was over. Shortly after, another crypto-friendly institution, Signature Bank, was shut down by regulators. The message was clear. The system was shaking. And across the globe, from London to Tokyo, everyone was wondering the same thing. Is this just the beginning? So why is this happening now? There are 4 key reasons behind this cascade of failures. The first and most important is the interest rate shock. To fight runaway inflation, the Federal Reserve has hiked interest rates at a pace not seen in decades. This move crushed the value of government bonds, which banks hold as safe assets. Suddenly, these safe assets were sitting on billions of dollars in losses, making the entire system incredibly fragile. The second reason is the meltdown in the tech and crypto sectors. During the boom years, these industries deposited enormous amounts of cash into banks like SVB. But when the party ended and these companies needed their cash back, they all rushed for the exits at once. This triggered a classic bank run, a tidal wave of withdrawals that no bank could survive. The third factor is shockingly poor risk management. Banks like Silicon Valley Bank had gambled, loading up on long-term bonds, assuming interest rates would stay low forever. It was a massive unhedged bet that backfired spectacularly, exposing a stunning lack of foresight at the heart of the banking system. And finally, we have global economic pressure. We're living in a world of persistent inflation, ongoing wars, fractured supply chains, and rising political tensions around the dollar's dominance. All these crises have combined to weaken the global economy, pushing an already vulnerable banking system closer to the edge. Now you might be thinking, this sounds like an American problem, but that's where you'd be wrong. The US banking system isn't just America's financial backbone, it's the backbone of the entire global economy. The US dollar is the world's reserve currency. Global trade, from oil to coffee, is priced in dollars. Countries around the world hold their savings in dollars, and US Treasury bonds are considered the safest investment on the planet. So if the US system catches a cold, the rest of the world gets pneumonia. A crisis in America would trigger a global chain reaction. Stock markets from Europe to Asia could crash. The dollar, the bedrock of the global economy, could lose its value. Major corporations could go bankrupt, and the world could spiral into financial chaos. This brings us back to the big question. Is this another 2008? The similarities are chilling. We're seeing a loss of confidence, widespread panic, failing banks, and balance sheets riddled with massive losses. But there's a key difference. The 2008 crisis was born from a housing market collapse and toxic mortgage-backed securities. Today's crisis is driven by an interest rate shock and the lightning-fast bank runs of the digital age. In other words, we might be heading towards the same cliff, but we're taking a different path to get there. Economists are now looking at 3 possible scenarios for what comes next. The best case scenario is what they call a soft landing. In this version, the US government gets its spending under control. The Federal Reserve carefully lowers interest rates, and the system stabilizes without a major crash. It's the outcome everyone is hoping for. The second, more painful scenario is a hard recession. Here the dollar weakens significantly. Unemployment shoots up, stock markets tumble, and the global economy grinds to a halt. It wouldn't be as catastrophic as a full-blown financial crisis, but it would mean a long and difficult period of economic pain for millions of people worldwide. Then there's the third and most dangerous scenario, a major financial crisis. If panic spreads to the US Treasury market, the supposed safest asset in the world, we could see the dollar rapidly lose value. The result would be a global economic collapse, potentially even bigger and more devastating than what we saw in 2008. And the warning signs are flashing brighter than ever. Yields on US Treasury bonds are hitting record highs, a sign of investor nervousness. America's credit rating has been downgraded. The dollar's share of global reserves is slowly but steadily declining. Major powers like China and Russia have been dumping their US bond holdings for years. And unbelievably, the interest America pays on its national debt each year now exceeds most of its major spending categories, including defense. The system is screaming for help. So where does this leave us? The rising debt and failing banks in America are not just headlines from a faraway country. They are the early tremors of a potential earthquake that could reshape the global financial landscape. The question we must all face is this: are these just temporary economic turbulence, or are we witnessing the opening act of a historic global crisis? The answer will define the world we live in for decades to come, because this isn't just America's problem. It's a global equation, and we are all part of it. Thanks for watching. If you found this informative, please like, share, and subscribe for more deep dives into the forces shaping our world.